Welcome to Coastal Front. Join us each week as we sit down with the movers and shakers of Vancouver to discuss stories of business, politics, accomplishment, and failure. Our aim is to keep you dialed into what matters most in our city. Now, here's your host, Andrew Johns.
Welcome back, everyone, to another episode of Coastal Front. On today's episode, I am joined by Chris Catliff, President and CEO of BlueShore Financial and a true veteran of the financial services industry. Chris graduated from UBC with a master's degree and held executive positions with both Van City and Citizens Bank before taking his role with BlueShore Financial. For 30 years now, Chris has been devoted to improving and growing the credit union system in Canada and in BC, and that's exactly what we're here to talk about today. Thanks for joining us on the show today, Chris.
Look forward to it.
So, Chris, we are going to spend a little bit of time talking about BlueShore Financial. You guys are a unique value proposition here in BC, but we're also going to talk about how the banking system is being affected today by both COVID-19 as well as this massive flood of new money that's coming in from the federal government, the central bank. And I'd like to also spend some time talking about the credit union system as a whole as well. Now, before I get you started, one of the things I caught off the BlueShore website about your history was quite interesting. So for those listeners, I wanted just to give you a little backdrop on BlueShore, which when I first started working with your company and what you were known as North Shore Credit Union, that changed in 2013, I think, around there?
Yes,
okay.
2013.
But let's talk about the history. So I'm just going to read this here for you. So on May 2nd, 1941, which I think you were saying was during the time of the Second World War.
Right.
There were 9 individuals who each brought $1 and gathered at the Palace Hotel to sign the charter for the North Shore Community Credit Union, and today known as BlueShore Financial. But the BC Inspector of Credit Unions almost prevented it from happening, as there was a requirement to have a minimum of 10 people to fund a credit union. So one of the founders ran home to grab his neighbor, who arrived in a pair of a housecoat and slippers with $1 in his hand to sign the charter.
And we're eternally grateful to him, I can tell you.
That's a good story.
Yeah.
So let's talk a little about, first of all, about BlueShore and who you are. You're the 5th largest credit union in British Columbia. Yeah. And as we see here from the largest credit union listing, you guys are currently number 12 in the country.
Canada, yeah.
In Canada. But tell us a little bit more about BlueShore.
Well, you mentioned you read off our website how we were formed. It was really at the foot of Lonsdale in North Vancouver, formed by deep sea fishermen, who there are not many out at the foot of Lonsdale anymore, and also shipbuilders who were building through the Wallace shipyards and Burrard dry docks, all these ships for the Second World War. And a lot of people were coming in, and the credit union was there to help them get the financing that they need and a place for them to put money. As you know, credit unions kind of recycle local money. And so that's what how we grew, and we slowly moved up Lonsdale, started branching out. And so it's been 79 years. We're now over $6 billion in assets under administration, and we've been doing great, kind of growing at a double-digit number for the last 20 years since I've been there, for sure. And but we've changed. We're no longer kind of blue collar. We're more blue chip, if you will. We've moved into the affluent market because of the movement of all those people onto the North Shore, particularly in West Van and North Van and into the Sea to Sky corridor. We've really expanded on the west side of Vancouver, and we really specialize in helping people with their financials, but also mortgages on what's called jumbo mortgages, large mortgages on valuable single-family homes. And in fact, we had a predominance of single-family home mortgages, houses, for decades. And recently, I'd say in the last 5-7 years, we've been doing a lot of condos for kids. So helping our affluent members buy their kids a condo.
Okay.
And that's been quite interesting and very popular. Actually, that was the most clicked thing on our website for the last 2 years.
Is condos for kids.
Condos for kids, yeah. And how to do it so that you do it properly with a second mortgage and make sure there's proper agreements so that if the lovely couple break up, the people that put in different amounts of money from the family can make sure that they're child keeps that.
Oh, that's really smart, and that's an important point. So you have advisors at BlueShore who help with this, as opposed to just papering up a mortgage. They actually go one step further and give that kind of advice?
Oh, absolutely. We have over 30 certified financial planners, which is the highest level of financial planning designation. And that's really our specialty, is creating a picture for our clients of their whole wealth universe and what they need to do to prepare for the next stages.
Yeah, great. Okay. Let's talk about a few more numbers here, metrics here. So you have 40,000 members, which maybe for the average listener might sound like a lot, but actually if you compare yourselves to your peers in the market, and I'm going to just look at this list here, for example, 40,000 members. By contrast, say Assiniboine Credit Union has around the same amount of assets you, has 126,000 members. Or if we look at First Ontario Credit Union, which again is around the same size as BlueShore, has 118,000 members.
Right.
So I think this kind of speaks to your point, which is clearly to have that few number of members, but with that much in the way of assets and assets under administration, which you said exceeds $6 billion now. Is that right?
Yeah. So what we're doing is we don't have a mass market strategy or what's called a wide strategy.
Okay.
We have a very deep strategy with a certain prototypical member, which again is affluent. We call it the West Coast affluent. We want to be the best in the world serving the West Coast affluent.
Okay.
And so we know what really matters to them, and we're right on top of doing that. And that's not about numbers in terms of members. That's about quality, not quantity. And so our average amount of assets per member under administration or profit per member, any metric you do by member, we're staff per member, et cetera, we're very, very high. So we can give that personalized service.
Right on.
So think of it more like a Four Seasons and a Howard Johnson.
Yeah, sure. Okay, that's a good description. And I will say, having been an outside observer of your organization over the years, and also, for full disclosure, a member for probably the last 5 years, that's been exactly my observation. And you guys have, I've seen your branches evolve, and your home branch is just like, it's I want to go there just to hang out.
Thank you. Yeah.
I think you call it your financial spa.
Yeah.
So if you haven't been to them, what's the address for that flagship location?
Well, it's right at 13th and Lonsdale.
13th and Lonsdale.
Yeah.
So if you haven't had a chance to check it out, go check it out. But you guys have branches all the way up to as far north as Pemberton.
Correct.
And I know you've got where my branch is, which is in West Vancouver and Kitsilano. And you're also out in Burnaby as well?
Yep.
Okay.
And Kerrisdale and all through the North Shore.
Okay, great. The other thing that I think is quite compelling is your credit rating. Now, there is, I believe today, only 7 credit unions in the country
that
have
correct.
a credit rating.
Yes.
Now, Van City, of course, has had theirs forever, but they have always been the kind of the behemoth. And then there's been a number that have come on board, and I think you guys have just got yours about a year and a half or 2 years ago.
2 years ago,
2 years ago. And what I was impressed by was most of them have only got a short-term credit rating, but you actually have also a long-term credit rating, which is BBB high.
Yeah.
I wasn't expecting that. When I saw that last night, looking at it, I thought it would be maybe, if you even had one, a long-term rating, I would think it would be BBB flat or BBB low.
Right.
And again, for listeners that are listening to this, to get a BBB high credit rating, the next highest after that is AA minus or single A minus. That's a very well within the what it would be described as investment grade credit rating.
Yes.
Yeah.
And we've done a lot to make sure we've got high capital and high liquidity levels. But if you read the detail of which one of the rating agencies, Dominion Bond Rating Service, DBRS, what they like about us is that we've got a very good, not quite stranglehold, but really our hooks are deep into the West Coast affluent market, providing them kind of unique differentiated value that, the big banks are kind of all things to all people across North America, and they have their different segments within it, but we're completely devoted to this one group, and they see it as a very profitable group in a very growing, profitable part of the country, and see that as quite positive for our credit rating.
Gotcha. Now, affluent markets are the obvious names would be, or types of people would be like doctors, lawyers, dentists, that type of thing. But what about business owners? Is that a market you guys, because there's a lot of affluent business owners out there. Is that a big part of your market?
Absolutely.
Okay.
And each one of those ones that you said, whether it was a doctor or dentist, they also have very interesting differentiated kind of balance sheets on how they run, and income statements on how they run their business and their tax situation.
Yeah.
We've seen all the myriad tax proposed proposed tax changes for small businesses and how things are evolving and will continue to evolve, of course, we just become specialists in that. So we're very good at providing lending where other financial institutions just want to see their maybe their NOA, what's called Notice of Assessment Tax Return. We look at a broader array of how their holding companies and their assets are working for them.
Okay, that's good.
And able to provide more creative financing.
Okay, excellent. I want to talk about a few more things, but about BlueShore. But I actually want to jump for a minute about COVID, because we are here in what are we, mid-June right now, and COVID-19, and a lot of the metrics that we're looking at is from your audited financials that are the end of 2019. So, how have you guys fared since COVID has taken place here?
Yeah, okay. So, well, I'm going to get to that question, but at first, because we were talking about the business owners, I just want to tell you that I used to call myself the loan arranger. And because I used to do a lot of loans to a lot of people in Vancouver, Greater Vancouver area. And as I've risen up and sat on more boards, I've got a little bit more divorce from the individual clients. But I have never had so much contact with our clients and members over the last couple of months. And these would be very affluent business owners that thought they were cruising into an incredible retirement. And they can be owning fitness studios or a chain of restaurants or even dentists were having difficulty.
Yeah, sure.
And all just phoning up saying, look, I thought I had it made. Now if I keep my staff employed, I'm going to possibly lose my house to you guys. I never even thought that was possible. That was my retirement, etc. So I've just spent so much time talking to so many people about their desperate situation. And I want to say that it would have been really, really bad if the government hadn't come in and done all these programs. And we can talk about how quickly they came in and what was all involved. But it's really helped a lot of business owners and sole proprietors, self-employed, to see that there could be light at the end of the tunnel when they were very, very depressed. People just don't expect that their whole business is just going to shut down for months on end, right?
No one plans for that.
No one plans for that. I mean, we tell everybody you got to keep 3 months of liquid cash ready to deploy if that happens. So I would say the shock for individuals and our clients has been the biggest thing. When we actually look at the numbers, and I'll go into the numbers if you like, but we were having a super first quarter, like many of the financial institutions. The markets were lined up right, and the stock market was going well, and then boom, it happened, and the world changed. So many interesting things happened. But what we did was to first react, as I said, we need to make sure there's cash out there, because we went through our disaster recovery program, which we have and we practice all the time and everything, but it's mostly for earthquakes.
Okay.
And so in an earthquake, people want cash because they don't, it could be, bridges could be destroyed for a year or 2 years. Everything goes to kind of almost primeval, right? With people wandering around with all the buildings shut down. So we got lots.
I never actually thought about it. Yeah, you're right. If just one of those two bridges goes down, man.
Right.
Yeah.
So we got so much cash from Brinks out to our branches, and of course, cash hasn't been used at all. In fact, it's gone the exact opposite way. So we've pulled it back. Then we thought everybody's going to be borrowing money and needing money very quickly, and that hasn't happened. And I'll go through some statistics on that in a sec. But the other thing we thought was there'd be a lot of transactions digitally, and there really wasn't. People were just hunkering in at home.
Okay.
What we did was instead of having to check your card every 3 times you tap and only being able to use it for up to $100,
yes,
we dramatically increased the amount that you could tap for. We also instantly put it to both grocery stores and pharmacies, so it could be used there. And then we just said, we'll let it be used everywhere. And so we've dramatically increased that. So people have just been using tap. They haven't been using other forms. Cash has gone almost non-existent.
Yeah.
I like to tell this story. We had one fellow that came in that took out over $100,000 of cash, which was his life savings. He went home, he put it under his bed, and he didn't sleep for 2 nights. He was so nervous that somebody would break in and take his money. So
and then he brought it back.
We brought it back, and we had a few other people like that or whatever. So what that's meant is we've almost gone to a cashless society almost like very quickly. And I like to say to my staff that we've progressed on our digital journey. Probably within 2 years we'll be where we would have been in 10 years.
10 years, yeah, sure.
So we've really moved things.
Yeah, leapfrog for sure.
The number of seniors that we got onto internet and mobile banking, our poor solution center staff, just spending hours with them, explaining them, what enter means on the computer.
What is
key.
username and password? And
right. And so we got them all going. And so lots of things happened in that regard. But the financial institutions have been extremely busy. So we didn't do any layoffs. We never thought about any layoffs. Okay. We actually did premium pay for our tellers at the branch. The provincial government declared us an essential service. So we never closed more than, we went down to 50% of our branches and we're back up to 100% again. But for a brief period there, we were down in our branches. But transactions went way down.
Okay.
Branch visits went way down, and we pushed that. But our solution center, our call center, web chat, went skyrocketing. And so we were able to, through the technology we had just put in about a year ago, we were able to have people stay in branches or at home and have those call center calls distributed out to them. And so it was like we had a solution center, a call center, but instead of everybody having to be in the same place, we split it in 3, and then we had a lot of other people staying at home and in branches. So that was amazing. And we went.
And was this using technology you had already adopted, or did you have to jump onto some new things quickly?
Luckily, we had already adopted it, and it just happened to have that capability with all the other things it had because it was brand new technology. So that was fantastic. So our calls went up about 5 times. Another thing that we did was we had our core banking system that we were going to upgrade on April, and we just thought April was right at the peak of the intensity of COVID, and we didn't know what was going on. So we delayed it 2 months, and we actually just did it remotely 2 weeks ago.
Oh, wow.
Our whole system upgraded.
And how's that gone?
Swimmingly.
Great.
Yeah, so it gave us a little extra time to work on it, so that was good. And then back to your question about how our clients are doing. When I look at the numbers, just an immediate, dramatic increase in savings. Our demand deposits have gone way up. Now, granted, there's some government money in that, right, from the CEBA loans and others. Huge liquidity into the market, which I'll talk about. So our members are not, they're saving, they're not spending, they're sitting on a lot of cash, which is giving us a lot of cash, and we can only put that into T-bills for, 25 basis points. And so we look at, a number of them came looking for mortgage and commercial loan deferrals. The banks gave 6 months right off the bat. We gave 1 month and 3 months. Just because we thought, let's have the discussion. Because the deferrals, they're really important for your cash flow, but they're not good for your mortgage. Right. Because what you're doing is you're re-amortizing your mortgage, which means you're adding years of payments onto it.
Sure.
And our whole mantra is to best advise our members and our clients on how to manage their affairs so that they can retire in grace, basically.
Yeah, sure.
So we've found that over the last exactly about 5 weeks, so the first of the 3-month deferrals started maturing, and we peaked of all of our deferrals on May 30th, so about a month ago. And now we have had 40% of those deferrals go back to regular payments, which is huge. Yeah. So everybody's worried about this big, what happens when everybody has to pay
So what's your belief as to why that's happening? I mean, look, we haven't seen a ramp up of that magnitude in business activity. Is that so, or do you think that's what it is? Or is it the CEBA loans and the wage subsidies and all the other money that's coming into the system? Yes. And I think people see light at the end of the tunnel now, and they're realizing that their savings that they have, they can now use and they can see how that will bridge them. To bridge them through so they're not deferring this obligation that's just going to add years to their mortgage.
Yeah, if their mortgage
Gotcha.
is at 3%, it's an after-tax 3% return, which they can't get anywhere else.
Right.
That's safe
Of course.
as paying their own
Yeah.
mortgage.
Yeah.
So why don't they pay that down and use some of the
Tax-free.
cash resources? But the other thing we're seeing is over about 40%, just under 40% of our clients that have their mortgage with us on their home also have a line of credit with us. And we've seen that the line of credit utilization go way down.
Way down, yeah.
Which is shocking. You'd think it'd go way up.
Of course.
But people are saving and not using it.
Yeah. But are they, Chris? That's the thing that that's the thing that I really question. Are people really saving, or is it that they've received their CEBA loan? Because if your market
or
is,
their mortgage deferral and and putting that cash away.
Yeah.
And I think that's a huge chunk of it. Yes, for sure.
Have you guys had a lot of business owners apply for CEBA through? This is just for listeners that are listening to this to understand. This is a Canada Emergency Business Account. It's a $40,000 interest-free loan. Takes you all the way out until it's due in December 31st of 2022. So it's 2.5 years. And if you pay back only 30,000 of the 40, you get to keep the 10,000. It gets sort of written off by the federal government, which makes it basically a slam dunk. I mean, you'd be a fool not to take it, even if you didn't need it as a business owner. So with that, are you guys seeing a lot of those applications coming through?
Yeah, I can't remember the numbers, but I'm thinking 20 to 30 million so that's a lot of them.
Right.
You know, in the over 1,000, I think. And the loan, it has really helped people with their cash flow. I think what happened, phase one of COVID, when I was talking to a lot of our clients, they were worried about whether they would lay off or not. And then they got the wage subsidy, or they got the CEBA loan, or they did lay off, but give people, I'm just laying you off for 2 months and then you come back. And then those individuals they laid off got to get the CERB, which is the Canadian Emergency Relief.
Canadian Emergency Relief Benefit.
Benefit. And so, yes, the government programs have really helped. But the other thing that's amazing to me is our wealth portfolio, our clients' wealth portfolios, both registered and non-registered, is continuing to grow. Yes, the markets come back. But they're not. Which is
amazing.
Yeah, but they're not taking money from that.
Right. Yeah.
So I think with the flood of liquidity and all this, it's really, and I think it's going to take us, we'll have to see what the second wave is like and how bad. But and some of the programs should slow down. But I really think, a lot of business owners, we're more focused on business owners and people that run a business as opposed to just workers that are, and those part-time workers and restaurant workers, they've been really poorly affected.
Yeah, of course.
Absolutely.
Yeah.
And that's tough for them. And we empathize with that. But I also have got to take care of people who are trying to figure out how they do retire when they're 5 years away and they own a restaurant chain.
Right. Yeah.
And that's a tough
one. That's a tough one. And maybe some won't.
Yeah.
Let's talk about this liquidity situation for a second. I got a statistic for you to read to you. This just came out last week. OSFI, which is the Office of the Superintendent of Financial Institutions, which is the regulator for banks. You're not a bank, you're credit union. We'll go into the difference between the two and who regulates you in a minute so people can listen to that. But here's the stats. From January 1st of this year till April 30th of 2020, we have seen the total amount of cash and cash equivalents by the entire banking system, namely the big two banks, TD and Royal, go up by $30 billion. So that's what you referred to as liquidity, a lot of liquidity. The Treasury people like to use that term. That's 30, sorry, did I say 30? I meant to say 300.
Yeah.
$300 billion in 4 months has been added to the balance sheets of the banks.
And most of that would have been in 2 months, really March and April.
Exactly, yeah. To give you a contrast, TD and Royal, which represent over 50% of that $300 billion, they increased their cash and cash equivalents, their balance sheet in all of 2019 by $5 billion.
Right.
And then in 4 months, that entire system's gone up by $300 billion. There is more cash in the banking system today than you and I have ever seen in our entire careers.
Absolutely.
It's astounding how much money's there. What do you think, what do you think this is a result of? I know my view, but I'd like to get yours. Maybe it's the same, maybe it's not. And B, how is this going to affect the banking system and BlueShore in particular in the coming months or quarters?
Yeah, so the money's clearly come from the central bank through various means. There's this emergency lending facility that it provides to the banks, but most of it has come through the government, the Bank of Canada buying mortgage bonds, essentially.
Yes.
And so we've packaged up a lot of mortgages, and we've got about $1 billion of contingent liquidity available to us right now. I've never seen it that high for us in terms of percentages. We've peaked out at about 16.5%. Normally we run at 8 or 9, 10%. So big numbers up.
Would that be referred to as your capital ratio?
No, that would be liquidity ratio.
That's a liquidity ratio. Okay.
Same thing with capital.
Yeah.
So yes, there's a flood of money into the banking system. And historically what happened was when the economy got going way up and then you'd get inflation, and then the Bank of Canada would raise interest rates to tighten it all down, and then you'd have a brief recession, and then you'd start to grow again.
Yeah, that's your typical
curve, right?
Business cycle.
Yeah, exactly. And we've had that for hundreds of years.
Yeah.
Now the alchemists at the central bank are trying to figure out a way of beating that, and what they've discovered and what they used in the last financial crisis is, instead of having everybody stop spending and stop doing anything in a deflationary environment, is just hit cash, particularly at the banking system, so that we're sitting on all this cash and that we have to lend it out.
Yeah.
And so,
because you don't make money having that cash sitting there.
Well, the exact opposite. We lose money on it.
Yeah.
We call it cash drag.
Right, cash drag, sure.
Yeah. So we're incented to lend out money to individuals. Now, of course, we're going to make sure, and this is another major point, is that the government of Canada has used the banks and the credit unions, the financial institutions, to put out all their programs. And the reason why they do that is because we know our clients. We know that they're not money launderers. We know that they're not crooks. And so they've said, put these programs through the existing banking relationship, because you know them already, and we know their financials, et cetera. So we've had, and it's interesting because they haven't done that with the fintechs, who are apparently we're going to take over the financial system.
Right, yeah.
They've been left out on the side because they don't have the strength of the regulatory capability that banks and credit
the same
unions
AML requirements and
all that
KYC,
sort of stuff.
Yeah,
know your client. So, and I do want to say one thing that just amazed me. Many people that deal with the Canadian Revenue Association, CRA, know that they don't like emails. They only take faxes, and it's hard to get through on the phone, and a lot of antiquated processes that we're not used to. So when the government wanted to put out, say, I'll give you an example, the CEBA program, they said, well, let's look around. Oh, the Export Development Corp, they're the most efficient of all of our Crown agencies, but even them, it's still kind of fax machines and everything. So what they said is, we're going to put this program out, and they worked with the financial institutions, and we all got it done within about 7 or 8 days. Yeah. And we worked in parallel on all the programming, so people were able to do it on their internet banking.
Yeah.
They were able to get this loan within 7 days, 8 days, and the lawyers drafted up the agreements. We made all the deals with the government and put all that money out like so fast. It's never happened before in our system. And again, that's going to rapidly evolve digital technology. Yeah. And with the government too. Sure. So that's going to be a big difference.
Now, Chris, let's go. You just touched on a topic that I absolutely love talking about. So I'm going to go down this rabbit hole a little bit.
Okay, sure.
Now,
what is it?
Well, you'll find out. So when Bill Morneau came out about 2.5, 3 months ago, maybe it's probably closer to 3 months ago, he said, I just had a call with the CEOs of the big 6 banks, and they've assured me that they will be here to help take care of Canadians. And I'm not a conspiracy theorist by any stretch, but I do believe that there's this unfair advantage that the big 6 banks have against the rest of the banking industry, credit unions and smaller banks, regional banks combined. And I do believe that there's also sometimes deals that get, whether it's a formalized deal or maybe just a wink, wink, nudge, nudge conversation that our Minister of Finance has behind closed doors. I have nothing to prove this, but I look at what happened in the rollout of that CEBA program. And I saw an immediate advantage that the big 6 banks had, and even bigger with the big 2 over names like BlueShore. And the reason I say that is twofold. One is being a business owner myself, aside from what I do here, I've got my other businesses that I'm involved with. So I have accountants that were applying for these programs. We had accounts at credit unions. We had accounts at banks. And one of the big 6 banks we had an account with, we were able to apply very quickly after it was announced. And it took the credit unions, we didn't have one through you guys, but which led to the next issue. We didn't get the access to the CEBA opportunity as quickly as we did with the banks. It seemed to me like the big banks had a major head start on rolling this program out. Maybe I'm wrong. Be like you to address that. And the second part that I think is even worse is that you could only apply through your primary banking relationship.
Right.
And so that's also what I've heard is where a lot of the big banks had a huge advantage, because you might have a business owner who maybe they don't have the services of a BlueShore, which sounds to me from what you're describing earlier as a full encompassing program. Maybe they're with a smaller credit union that only has some basic services, but they like supporting that credit union for all the purposes that people like being part of a credit union. But when they went to apply, they're like, well, you're not our main bank. It's actually this bank over here because they do all our credit card processing.
Or operating loan.
Or operating loan.
Yeah.
And so it seemed to me like the big banks had this huge advantage. Again, I may be being a little cynical here because of my viewpoint, but can you comment on that? Am I off base, or what do you think?
I think so, yeah.
You think I'm off base?
Yeah.
Okay.
I'm sorry to say.
No, that's okay. Let's hear
why I think is because I think in that situation, the most important thing was getting money out quickly, as safely as possible, because it's all of our money, government money, and doing it in a way that got as quickly as possible to those business owners and others that I was talking about that really needed to make some decisions quickly about whether they could survive or not.
Sure.
And it was there's been enough studies done in the past that if you act quickly, you mitigate the amount of people that are going to make a decision to just throw in the towel and go bankrupt.
Right.
And or lay off all their stuff and shut their doors. So you give them hope. If the banks were the quickest to do it, I can tell you credit unions like mine were like 1 or 2 days behind them. And the fact that they went first is fine by me, because I use the same agreements. So there's a lot of work that was done by a lot of people. I can tell you that our mission statement is to passionately improve our clients' overall financial well-being in an interconnected digital world. Mm-hmm. And when all of our plans and everything went out the window, we just went back to our mission statement and said, we got to help our clients in their financial well-being, maybe not make them retire right now, but save them. And then we got to do it in an interconnected digital way. Yeah. And that mission was, we just put that back up on the wall and said, that's what we're focused on. So forget all your incentives, your goals, what you're supposed to be doing, what we said our projects were. That's what we're focusing on. And I think the other financial institutions did that as well. And I think the government made a smart move by working through the financial institutions, not others. I think most of the fraud you'll probably see is in the CERB, and that's not really controlled by the banks.
No, it's not. Yeah.
So I think.
Okay, so for the record, then you don't feel as a CEO of a major credit union in Canada that you had a little bit of a lesser advantage to the big banks in this circumstance.
I think we were a few seconds afterthought. Yeah. And our leaders at our association, CCUA, let the
advocated for you guys.
Advocated for it. I mean, I got a call from a minister at 6:30 a.m. on a Sunday morning to approve us to be able to do the loans on Monday.
Is that right?
Yeah. Okay. So I'm shocked at how, and they reached out and everything. It's just, it's easy to work with 5 big banks quickly and get that done and then distribute it out. So I think. Okay, well, that's good. Well, thank you. And this is why I liked having these candid conversations. Let me have one more crack at this one. Sure.
In a different way. Okay. Let's talk about pre-COVID. Yeah. Let's talk about, before any of this stuff, let's just talk about the banking system in Canada and the credit union system in Canada, and maybe even more so in BC. And do you feel that there is a growing unfair advantage? I mean, this is a loaded question. Obviously, you can get the sense just the way I'm asking this question, what my view is. Do you feel there's an unfair competitive advantage that the big six banks have over the rest of the competitors in the marketplace, like BlueShore Financial?
That's a very complicated question that I've spent my life looking at. I think, there's on one side, there's an argument that we have an oligopoly.
That's my view, obviously.
Okay, yeah. So unlike the United States that has thousands of banks and,
Yes.
and many regional banks, but what we have in this country and we've had for a long time is really good safety of money.
Mm-hmm.
And you don't get that in the United States. They've had savings and loans crises,
Yes.
banking crisis. The whole 2008 was really brought on by them. And
For sure.
So we made some decisions way back in the 20s, 100 years ago in this country, that we wanted to have a stable financial system, and that we would allow consolidation and concentration. If you remember back, I believe it was Finance Minister Paul Martin was stopped the merger.
The merger, yeah.
Of the,
I think it was in the early 2000s or late 90s.
Late 90s, I think. But, so we've kind of said enough's enough on the concentration side. And then I think that the credit unions do a great job of filling in the holes. What you see in Canada is where people believe that their best decisions about how they run their life are not run out of Toronto in this country, they tend to use alternatives to Toronto head office financial institutions.
Mm-hmm.
So Quebec's a perfect example with the largest credit union system, Desjardins.
Yeah.
And but also in the prairies, where credit unions are really big in agricultural lending. And if you have a bad crop, which is totally act of God, you don't lose your farm.
Yeah.
Because credit unions, make sure that
Work with you.
In British Columbia, we've got some fantastic credit unions, some of the best in the country, and they have value propositions that are different than the big banks and survive and do well. And we have the support of our provincial government, who regulates us in a tough manner, but with love.
Yeah. Okay.
So I think I think that it's probably harder for the smaller banks because they only have the $100,000 deposit guarantee from CDIC, and they're not too big to fail, which is the big ones.
Sure.
Yeah.
Has BlueShore gone through any mergers? Did you guys?
No.
You've just grown organically?
Said, yeah.
How long have you been the CEO for?
20 years.
20 years you've been the CEO?
Yes.
You started when you were 12? Or?
No, I started when I was 40, and I've just turned 60.
Good for you. Wow, you're looking great, man.
So I started 20 years ago, and in fact...
So all this growth has happened organically, effectively.
Yeah, so that's been it is impressive, but it's not surprising because mergers allow you to bring two balance sheets together, but then what are you? What are you for? Who are you?
Sure.
If you can come up with a vision that's targeting a segment and you can be the best in the world at delivering to that segment and using your data, then you can get everybody focused around it and then grow organically. And that's what we've done. And we've had kind of a 13% compound annual growth rate through that whole period on the deposits and loans, and then even more on the wealth. So, so it's been great.
Okay. Well, that's great. One of the numbers that caught my attention is that you guys every year, as BlueShore Financial, you have, as you mentioned, just under 400 employees, and your employees collectively, and I'm assuming you're part of this, is provide over 10,000 hours a year of volunteer services to the community.
Yeah.
And you guys also have a policy of paying out just over 1% of your operating income, which last year was a total of $227,000 that you donated back into the community.
Yeah.
Which I think is really impressive. Can you talk a little bit more about this policy of the 1% and maybe a bit more about what you're doing in the community?
Yeah, it's a requirement to be labeled an Imagine company, and we've been doing this I think for 20 years.
An Imagine company?
Yeah, Imagine is a kind of like a best housekeeping seal type of thing for corporate donations.
Okay.
And so we follow their
Pull up that website, maybe Jasmine.
Yeah. And so we follow their protocol and we donate it back, and we donate it back to causes that are important to our clients and our staff. And oftentimes vote on them. We don't want to make too big a deal about it. It's really part of our tithing to be part of a strong community. You give back. So it's been great, and I get to work with some of the nonprofits when we do that, and it's very rewarding.
What are some of the names of some of the nonprofits that you kind of like, you get excited about contributing to?
Well, this morning it was Coast Health Society that deals with mentally challenged.
Okay.
We've been doing BC Women's, Children's Hospitals, particular. There's so many of them, but all across the sea to sky as well.
Yeah. Was that Imagine? What was it called again?
Imagine. Yeah. We'll look at it in a second.
Yeah.
But
the volunteer work. What are some of the kind of work that your employees do for volunteer hours?
Well, a lot of it comes from community stuff. So what they're really interested in.
Yeah.
We have so many soccer coaches, hockey coaches.
Right
the
on.
rite of passage for young adults is really to go through that. Younger ones are doing Big Brothers, Big Sisters, things like that.
Yeah. Okay. Great. Let's talk a little bit about the deposit losses on deposits, the insurance coverage you mentioned earlier, backing of 100% insurance coverage, and how that differs from the banking system.
Yeah. So CDIC insures up to $100,000 by kind of account type.
Yeah.
And at a credit union in the 4 western provinces, you have the provincial guarantee, which is unlimited. Mm-hmm. And so essentially,
so it's different from CDIC.
Yeah, it's for us. It's called the Credit Union Deposit Insurance Corp. We have money in there in a fund, but before it even gets close to that fund, we have another group called Stabilization Central, which is a group that we run collectively as credit unions. Which, if any credit union is having problems, we send in executives to help them sort out their problems before the regulator needs to do that, because we don't want to have any regulatory issues in any of our credit unions, and we're highly regulated. And so we do that. We fix ourselves first. Then if the province, they regulate us and look at us and examine us every year and give us ratings, et cetera. And we've got this fund set up, and it's very large and has grown quite a bit. And then behind that is the provincial guarantee, but also the emergency lending facility has come in for our central, and that comes from the Bank of Canada. And then, of course, we can always securitize our mortgages, which we do. And so there's lots of liquidity. There's lots of capital to take losses. No credit union credit union depositor has ever lost money in a BC credit union.
Oh, really?
During the 80s, we had a big, bad recession. No money was lost by...
Have there ever been any insolvencies of a credit union union in BC?
I don't think there's been insolvencies, but what's happened is if a credit union has suffered badly, it gets merged.
Okay.
And in fact, some of the biggest credit unions are the result of absorbing a lot of other credit unions. So there used to be 200, and now there's 38 or something credit unions.
Yeah.
So we just take care of our problems and merge it in, and we always have strong ones. Credit unions tend to be less riskier than banks, a little less profitable.
Yeah.
A little less risky.
How do you quantify that? Because I remember when we spoke a couple of days ago, you'd mentioned that statistic that credit unions tend to be less risky than banks. Can you speak to how you quantify that?
Yeah, so what we do is we look at both studies in the United States and in Canada, done by think tanks, CD Howe, Filene, all these groups. And then we look at, and in fact, our own regulators have done it. And you look at the income and the credit losses and delinquencies of the various institutions. And you look at the banks and versus credit unions over about 50 years. And you'll see that banks are more profitable, but take on more risk. And so when there's a downturn, they lose more, have more credit losses.
Yes.
And so we're a lot more stable, but we're cooperative. So we're not driven by profits to the same degree that banks are. It's very important what that share price is.
Yeah.
So it's a great thing to be I would argue it's a great thing to be a shareholder of a bank. It's an efficient, effective machine to deliver profit.
Yeah.
May not always be as soft as credit unions on the customer engagement.
But a good in holding in your RSP account.
Absolutely.
I always say that. People should always have some
own
Royal
banks,
Bank and
own bank stocks, be a credit union member.
Right. I like it.
Because banks are an open system, which is an efficient system used to get profit for the shareholder.
Drive shareholder profit, yeah.
Credit unions are a closed system. Our shareholders are the customers. So if we're taking
and everybody has an equal vote.
Right. But if you take too much money from the customers, you're just giving it back to them in dividends or services. So it's kind of like some people belong to maybe an athletic club or something. So what do they charge for the food? You know, if they charge too much, the dues have to go up. And if they charge little, if
they charge too much, the dues go down, and if they charge too little, the dues have to go up.
Yeah, exactly. Yeah. So it's an equilibrium they have to figure out. So that's what we do. But more importantly than that, I think, is that credit unions raise about 80% of their deposits in the retail, whereas banks 40%, 50%. They raise a lot more wholesale through BAs and commercial paper. So because we raise so much through retail, and because we're so retail focused, and many credit unions don't have a rating, but like us that can raise it so easily wholesale, we tend to give far better rates. And so it's quite remarkable how much better our rates are. And if you look at somebody with our rating or with the backing of a AA provincial government guarantee.
Yeah. Well, actually AAA with the 3 American credit rating agencies.
Yeah, exactly. So there's a blended rating there, but AAA with those guys. And you're getting a AAA guarantee, and you're, instead of provincial 1-year bond right now probably be like 26 basis points. That's or something.
Yeah.
And you're probably getting on a 1 year right now about close to 2%. So
on a 1 year GIC.
Yeah. So you're about almost 7-10 times difference.
Yeah.
We did have one credit union was offering 3% just in a 1 year. 3 weeks ago. So it is a safe place to put your money, and as interest rates go down, it's really important to maintain. Now, we have a deflation, so you don't have to fight for inflation for a real return right now, but that deflation's only been the last 2 months. And we'll see where that goes.
Well, you bring up a good point about about losses, and one of the things that my team tracks is what we refer to as actual loan losses. I like looking at those in particular because allowance for loan losses really just state what you think you might have to account for into the future. It's just a guess.
Right.
But what I think is a telltale sign is how does a financial institution do year in, year out with their actual write-offs, like what they've actually documented as a loan loss. And the statistic is very stark between the big 6 banks and credit unions.
Right.
I mean, the big 6 banks' average actual loan losses is somewhere around the 30 basis point range, and for the credit unions, it's south of 15, so it's like half. Now, I think it speaks to the strength of the banking system that you alluded to earlier, because just for people to understand, 30 basis points in loan losses, if that's your average amongst the big 6 banks, that's 30 cents on every $100.
Right.
So it's really not big. It's not large at all.
Right, and you'd have maybe 400 basis points or 4% on credit cards in that mix, right? So the bit that's credit cards and business loans.
That. Yeah. But I still I always go back to that metric, because when I think about if I'm a depositor putting my money in with a bank or credit union, what's the number one concern I have?
Getting it back.
Will I get it back? Right? Because when I make a deposit and buy a GIC or high interest savings account, I'm your lender. I'm lending to you. So just in the same way that your commercial and retail lenders should make sure the first thing they do is make sure they lend to people who will pay back.
Right.
And so I just simply go, well, what is your history of paying back loans? And if you have a loan loss that's like south of, do you know what your latest loan losses were for 2019? I'm kind of putting you on the spot.
No,
here,
but I mean, we were down to most of 2019. We were around 0.00 delinquency. So not even registering delinquency in the loan losses. We had a few in leases, but and I don't know, 1, 2, 3 basis points.
Yeah, amazing.
Right.
Yeah, that's amazing.
In fact, it's been so low for the last number of years. I keep thinking it's got to get worse, and it hasn't been. But now we'll see.
Well, what's that old saying? Be careful what you wish for.
Yeah,
You
well, I wasn't wishing for it. But I would say I've devoted my life to making sure I've thought about any possible way that I won't be put in a situation where I can't give people their deposit money back.
Yeah. Okay.
So that's what we do. That's why we do all those games for what happens with earthquakes.
Yeah, sure.
Right?
Yeah.
That's why we had 70 laptops that we could deploy to our key staff to get them working, as soon as the stay-at-home order came in.
Yeah. Well, that's good. I'm glad you guys were able to do that. That's great news, and you obviously were well prepared. What is a financial spa?
Okay. I'll tell you the story if you don't mind.
Yeah.
Quickly is that when I first came to North Shore Credit Union at the time, and I figured that we were shifting to a lot of more wealthier people that were building houses repeatedly, and they were getting a lot of good income, but they didn't know the stock market so well, but they did know how to build, and they had a lot of cash on deposit with us. So I surveyed them and asked them what they wanted, and they said, when I go to my bank to do my financial plan, it's like going to the dentist and getting a root canal. I don't like it as bright lights. My
wife's a dentist.
Okay.
I completely get that.
So they said, I don't want somebody rooting around to me and telling me, why did you carry a balance on your credit card when I gave you a line of credit? Like, it's like you're not flossing enough.
Totally.
And so. And then when I saw my wife at an event where we were at a conference, and she went to a spa, and just how relaxed she was with all the senses in play. And I thought, if I can make people that relaxed when we're doing their financial planning, then they will open up to us. And so we designed everything to give you a full sensual array like you do at a spa. Smell, music, design. Our financial spas are designed at West Coast contemporary home, like that, with residential lighting, nothing like any other financial institution. It's quite different. We have concierge. We have just a very, very beautiful experience. Much like so, what I found with our key affluent is, they are so busy. They're such high achievers. They've got both have jobs. They've got kids they got to take care of, ailing grandparents that they're worried about. Their life is just crossing off things on their list. But every once in a while, they go somewhere and they get cues that they can relax for a moment, and they're going to be taken care of. And that is what we do.
And that's your vision. That's what you guys do.
And that's what we do, and we get huge marks on it from our clients that we value their business 30 points better than the banks, that we've treat them very much where they're not a number. It's they're valued, that we're experts in financial advice. So it's a big change for us. It seemed like a crazy idea at the beginning, but it's really taken off, and that's really why we have. That's why we got our organic growth. And
how is the we wanted to talk a bit more about technology. So how does that translate? Because that's the in branch experience. Right. Do you have a digital financial spa, or what? How are you approaching? And obviously, COVID, it sounds like from what we said earlier, has kind of fast-tracked this entire experience. How is that technology side of it developing?
Yeah, so I'm talking Friday morning to, we have, I think our top 35 executives at BlueShore are going through a solder school business certificate with BlueShore Leadership Development Program.
Okay.
And I'm pitching how are we going to create the digital financial spa at them in groups. And so I'll be talking
to... Oh, are you really?
Yeah.
Okay.
It's a key question. But at its fundamental level, what we do really, really well at BlueShore is we take an individual's personalized data and we service them extremely well in terms of what they need for their future. We always say, we've got your back. we look for what you need before you know you need it.
Yeah.
In fact, when I was interviewing those clients I talked about before, they basically said, don't try and sell me anything. Don't push stuff at me. Tell me something I didn't know that makes me money or saves me money, and do it in the way that I like to be dealt with, which could be text, email, whatever it is, in person.
Yeah.
And if you do that, you got me for life. And so been devoted for the last decade to make that happen. So what we do is we use individuals' data, things like we look at people like you, and we try and figure out what it is. So maybe, Andrew, you might be overly invested in stocks and under in bonds for your age, or not enough in real estate, or not taking care of your people your age that have, say, 2 kids, are starting to think about a condo for them at that age or whatever. And are you doing it in the correct way? So we're constantly doing proactive contact to help you think about what you need to do to either save you money or make you money, or the third one is to save you time.
Right.
Because these are time
Which is worth
server,
a lot.
Which is worth a lot.
For many people, it's worth more than...
Right. And so most of our members like our recommendations. About half of them say, you do it, just do it. And the other half say, give me 2 or 3 options and then I'll quickly decide.
Yeah.
And so to do that, you need to be really good at business intelligence, artificial intelligence, and data usage, and that's what we're going to be good at. The question is, do you deliver it in person or do you deliver it digitally? Obviously, with COVID, because we're mostly a financial planning shop, we've moved to digital financial planning, and we've been doing that on Skype for business. Is kind of our preferred.
Really?
Yeah, and so that's really advanced and going forward. We don't need to get signatures on what we call wet signatures on anything. It can all be done. I'm sure you've been seeing this. Everything's been digitized in the last little while because it had to.
Using
right?
services like DocuSign, for example.
Exactly.
Yeah.
And there's many of them, and the regulators are having to catch up on that, and we're not going to let them go back to the old ways.
Yeah,
because this
no
stuff,
one should.
No one should. But we're fighting.
The regulators
with
have really got to make sure they support that,
and they know that, and they're going to do it.
Yeah.
But it's kicking and screaming.
Yeah, yeah, wow. Regulatory forbearance. Can you tell me first of all, what does that mean? And
I think so.
Yeah, and maybe if you can't, no problem. And how does it affect credit unions, and in particular smaller credit unions than say a larger one like yourself? Yeah,
I think it means that the regulator will look at the situation, it's like the COVID situation, and say, here's some changes that you guys can make. We're not going to hold you to these. Do this.
Okay.
That's what I think it means. But if it doesn't, I'll find out.
Admittedly, I don't know what it means either. That's why I asked the question. Yeah.
The regulators did come out to us and say a few things. They said, this ratio over here, don't worry about it. We know you're going to be doing this. This ratio over here, delinquency, we know we want you to do deferrals.
Yeah.
So we're not going to count those as bad loans yet.
Okay.
So things
Is there
like
a lot of dialogue with the regulators here in BC?
Absolutely. All the time. I talk to the Minister of Finance quarterly with the regulators. We meet with them at all different levels all the time. We're joined at the hip, and I guess that's another thing about what I wanted to say about depositing in a credit union. I said it was more circular and everything, but it really is what we learned in the 80s and even in the financial crisis is that when you deposit in an international institution, they'll take that money anywhere. Could be into the Caymans, could be into wherever the hot spot is. And so they actually make recessions pro-cyclical, and that means make them bigger. We actually make them counter-cyclical in the sense that all the money that's coming to us, we're reinvesting locally. And so many of the municipalities, universities, schools, hospitals take their extra money and invest it with credit unions because they know it's being used locally to help the very same people that are using their hospitals, living in their municipalities, going to their schools. And so that's a great thing that we do. And the fact that we pay higher rates and do it is even bonus. The fact that it's got that AA, AAA guarantee on it is fantastic as well. And so I think it's an important point to be made.
It is an important point, Chris, and I do agree that when you look at the history of the big banks, and while they all have phenomenal credit ratings, and they they bode very well during the financial crisis. They did incur some substantial losses during that time, and likely will be in the future here, in my view, with COVID. And it's because the credit unions, as you pointed out earlier, are kind of all things to all people. And they are, I often describe to people who ask me about credit unions, which I obviously know well, I say, credit unions are what banks used to be 200 years ago. They basically know their members, they take deposits from them, and they lend them out to other members who need loans. And that's it. They're not in international markets. They're not doing derivatives trading. They don't have prop desks. They're not doing all the sort of fancy high finance
deals,
stuff. Bought deals,
right.
Investment banking, which, as you pointed out, when times are good, that's a great market to be in. And
Absolutely.
you want to hold it in your RSP. But when you have times like this, it also makes it very prone to them, losing money. Now, on the flip side of that, Chris, to challenge you on this, though, one could make the argument that the risk of a name like BlueShore is concentration risk.
Yeah.
How do you address that?
Yeah,
and
so
maybe before you do, just so other listeners understand what I'm talking about, is your region is the Sea to Sky corridor,
right,
and a few areas within the GBRD, and a large part of your portfolio are mortgages.
Yes.
So one could argue, well, there's a lot of residential real estate market risk that's concentrated in your balance sheet.
Right. And you could even say, because we focus on single family homes, mostly the third, fourth, fifth time purchase, so these are high equity but larger homes.
Okay.
They've already been hit significantly in terms of price, but our loan to values are so low and the borrowers are so good, we haven't seen any delinquency or losses. Okay. So concentration risk is, when you look at the studies, and it's very important, that the idea is, do you spread your risk over a whole country, like a bank does, or are you credit unions, are you in one area and then, so yes, if it's a single resource town,
right,
that's a problem,
okay,
right? And the company mill.
So if you were like, not to knock them, but if you were like Fort McMurray Credit Union, I don't even know if the one exists, but...
Well, there was a Squamish Credit Union,
okay,
and that's served, it was actually the mine there, I forgot.
Oh, the
Britannia Mines Credit
right,
Union.
Yeah.
And it...
there was a Safeway Credit Union
right,
at one...
Right, so the Britannia Mines Credit Union in 1956, I believe, all their members couldn't pay their mortgages back.
Because they all got laid off.
Somebody bought the mine and shut it down. And so what happened was all the other credit unions took those mortgages and put them on their own and gave the period of time for them to pay off those loans. So that would be an example of the worst part of concentration risk.
Okay.
But actually what happens, and the studies will show, is that credit unions, because they know their markets so well, they're actually experts in lending. So we're experts on lending onto Whistler chalets or waterfront homes in West Van.
Right.
But we lend on the homes that face downtown Vancouver and get the sun.
Yes.
And not the other ones on the other side that face the wrong way, sort of things. Like
okay.
we really know what we do.
Yeah.
And a lot of our lenders drive by and know the property. We're not doing it through algorithms. We call factory lending.
You kick your lenders. Your lenders kick the tires.
Exactly.
And they go out your bankers. They go out there.
And when we do commercial lending the same way, we're right there. We're not doing it based out of Toronto, based on algorithms.
Yeah. What is your average size mortgage, and what would be the highest size of mortgage that? So for the listeners who might be entertain the idea of coming and joining BlueShore, what kind of mortgage ranges?
Well, I think we're $12 million on a commercial connection, and then kind of a $2 million on a residential, I think, but have gone higher.
Yeah. Okay.
But generally, our average mortgage size, I think, is somewhere around $700,000, something like that, new mortgage.
Yeah.
And then most of them are paying off and amortized quite far down now.
Yeah. Okay.
And we're of all the loans that we have, we have deposits and loans mostly on our balance sheet, and of all the loans we have, it's about 98% real estate secured.
Okay.
And we feel really good about that. Low loan to values and good credit scores.
Yeah. You mentioned a little bit earlier that the liquidity has been increased because of the access to the mortgage-backed securities market, and the fact that the central bank is buying these up like crazy. And I understand that back in March, there were some regulatory rules or some changes that expanded the list of homes that qualified as insured mortgages. Is that right?
Yeah, so they brought out the same program that they did in the crisis. Back in 2008, which was to immediately allow a lot of mortgages to come in. That absolutely rock solid safe mortgages, but didn't have all the same criteria that they were requiring at that time. So they loosened. The financial institutions put those packages together, packaged them up, sold them off, and that's been a flood of liquidity to the financial institutions.
Right. Okay. Before we wrap this up here, you've done a great job, Chris, in not only speaking to your own institution's strength, but the strength of the BC credit union system. One of the concerns I have as someone who believes in free markets and competitive environments, and that's why I gave you my loaded questions earlier about the big banks and my kind of biased view that they have too much control, and I do believe they are an oligopoly. I don't know what the number is exactly, but I believe the last time that BC saw a new credit union being formed was over 30 years ago. Or maybe even 40. And today, for someone to start a credit union, again, going back to the history that I read there, that in 1941, North Shore Community Credit Union was started with 10 people, each with $1 in their hand. And today, I think to start a credit union in BC, you have to have I think it's $10 million of working capital or something like that.
I think it's $10 million of capital and then a lot more money that's just a start.
Right. Yeah. So do you have a view on, and you mentioned also earlier how there's just been this continued consolidation of credit unions nationwide. We see smaller credit unions like Enderby Credit Union. You mentioned a small resource town or individual town got acquired by First West. First West has been on a tear with the acquisitions. Do you have a view on the fact that there has been no spawning of new credit unions in BC, and do you think that's a good thing or a bad thing?
I think it's a good thing. I think there's two reasons.
Okay.
If I go back, I think the last credit union that actually was created in BC might be Sharon Credit Union, which was a Korean-based one for immigrants. I think the last one in Ontario was back not too many years ago, Italian Credit Union in downtown in Little Italy in Toronto. And credit unions were formed because good, solid, well-meaning, upstanding people couldn't get access to credit.
Okay.
So I think in today's age with credit models, computerization, algorithms, and with a hunt for capital looking for returns, anybody who's going to responsibly pay back their credit is going to find a loan. Now, they may not like the rate, but I think the market's very efficient.
Okay.
That's one reason. And the second reason is I think that credit unions that are already existing are smart enough to figure out where a new credit union could form and are likely to go in and offer that market. I think of ourselves back a few years back when a couple of the big banks, when George Bush was in power and he was put on sanctions against Iran, and those carried over into Canada, if you recall. And there's many Persian Canadians that live on the North Shore. We got very good at lending to Persian Canadians before they started a Persian Canadian credit union on the North Shore.
Okay.
So that's just one example, but there's many. Van City does a great job in servicing markets that are on the edge.
Yeah.
And other credit unions do as well. I could think of many examples.
Yeah. So you actually think it's a good thing that there are no new credit unions being formed?
I think that the most effective way that credit unions can work is to share the scale at the back end. So we have, we share credit companies with Desjardins and with all the credit unions. We share a wealth backbone, an ATM network that's I think the fourth biggest in Canada.
Yeah.
So we share those big scale items, and then we go individually into the market where we have a real good niche.
Right.
Where new niches develop, I've seen credit unions split off a bit and grab those up and join them in and bring them and add them to the scale. Okay. I don't see the need for a lot of new ones happening out there.
Okay.
I think of, even in payday lending,
Yeah.
that's probably the area that needs the most help. I see other alternatives being provided by credit unions for those individuals.
Okay. Last question
Sure.
for you on this is more about transparency and accountability. So the big publicly listed banks, obviously, they're required to be a public company to publish their audited financials every quarter. Anybody who's an OSFI regulated deposit-taking institution is also required to provide their balance sheet monthly and their financials every quarter, even though they might not be audited, and that's all available on OSFI's website. Credit unions are not required to publish this more than once a year. Do you think there should be a shift in that sense?
No. First of all, I think federal
situation like COVID coming along.
Yeah, I think federal. That's a good point. But federal credit unions do, I believe, and then some credit unions that issue different things, and then some other provinces do, like Service does quarterly financials. I don't think so, because I just don't think we're that complicated, or that the delta that we have year in year. I mean, yes, we grow, but we're not. We're generally organically growing in safe business lines and not expanding into other risky areas. And then, of course, we not only provide the regulator our monthly financials, but we share them amongst the credit unions. And believe you me, if one credit union is not acting the way it should be, the other credit unions know it very quickly, and so do the regulators.
Yeah. Well, it is definitely a community. I can speak to that for sure, being so involved in it for as many years as I have. So if somebody wants to become a member of BlueShore Credit Union, and obviously this is the website, it's blueshorefinancial.com. I did notice one of the things that caught my attention as well. I see your menu items along the top there is personal business wealth advisors. You actually offer a lot of services that most credit unions don't. Like I noticed you have like leasing arrangements. You have, looks like you can offer insurance. Yeah. And you have mentioned you have certified financial planners as well.
Yeah. No, I would say most credit unions are doing leasing. Some do, some don't.
Yeah.
But I would say, most are in the wealth side of things, and growing that area incredibly well. And in fact, if you looked at the March and April and May, credit unions had net sales and growth in wealth when the rest of the industry went down. And in fact, our flagship Northwest Ethical funds, which are ESG funds, they actually grew as well when most of the funds were going down on net sales. So we don't know whether that's because of our demographic or the trust we have, but it's also think we're garnering money from other institutions because we're perceived as safer, more trustworthy sort of thing.
I see. Is most of that money, in your view, like, do you have data to show where it's coming? Is it coming from other banks or is it other credit unions?
It's coming from other financial institutions for sure, not for us, not credit unions.
Yeah, from other
so I'll
banks.
let you. Yeah.
Well, Chris, this has been great. Have I missed anything here?
No, but that was great. And the fact that I didn't know you were a member until we just started this, thank you for that. I appreciate that, and BlueShore does. And the fact that I didn't know your questions and we had a great interview is great as well. Thank you very much. Great.
Okay, well, Chris Catliff, President and CEO of BlueShore Financial, really appreciate you coming in today. I thought it was a very enlightening conversation. I am happy to be a member, and I think you guys are doing a great job, and I look forward to seeing your continued success and growth, and impressed that you've been with as CEO for this company for 20 years now. That's a really big statement. And next year's your 80th, not your 80th birthday, but the 80th birthday of the credit anniversary of the credit union.
Yeah, and very few companies get to be 80 years or 100 years.
Yeah.
But if you look at them, most of them are either family-run companies or co-ops.
Yeah.
Because if you're a publicly listed company, you're one bad quarter and you're toast.
Yeah, yeah.
And we have a very long range view on everything.
Yeah. 21 years till BlueShore Financial becomes a 100-year-old institution. Will you still be the CEO then?
I'm sure I will not, and it will be capably led by others.
All right. Well, Chris Catliff, thanks for coming on the show today. Really appreciate it. Thank you very much.
Thank you, Andrew.
And I'll shake your hand next time because we're still in the social distancing. Thanks.
Right.